Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading action of the D Street today, the setup as well as the strategies that you need to know for the trading session today. There are a whole lot of moving parts that you need to keep an eye out on. Remember, after a havoc that was played across the D Street on Monday, yesterday was a sigh of relief that we saw across the D Street. In fact, the BSE listed companies regained about 60% of the market capitalization lost in the Monday's trading session. They've added more than 7 lakh crore rupees in value as well. But now, as we move into the bang in the middle of the week, investors are gearing up for the big event today, that is RBI's monetary policy decision, the first one of the new financial year and the first one after Trump's tariffs decisions have been announced as well. The central bank is widely being expected to at least announce a 25 basis points cut, but we'll have to see what the commentary is all about post-tariffs. Will there be a case for a deeper rate cut to cushion the economy from the tariff impact is something that the, all the investors will be looking forward to understanding. The other major global impact will be seen as the new tariffs that were announced on April 2nd will come into effect on 180 countries on US midnight time tonight, which will translate into 9:30 a.m. today for the Indian markets as well, adding to the 10% baseline duty that was already implemented on Saturday as well. So with each respective tariffs that were announced on April 2nd, that comes into effect starting today as well. So as the trade war also escalates, US President Donald Trump's decision to impose a 50% additional tariff on China, bringing a total of 104%, combined with the outcome of RBI Monetary Policy Committee back home, the FII persistent sell-off, weak global cues, the mood for the Indian equity markets will have to be very, very carefully judged and gauged for your strategies too. Remember, overnight in the US, we saw all the three major indices close lower. Dow Jones drop about 0.8%, marking a 4-day loss of over 4,500 points over concerns of tariff. Apple led the losses as the company is expected to face higher costs due to the new China tariffs. S&P 500 has declined 1.5% overnight. The index also came to very, very close to entering bear market territory, down nearly 19% from its February peak as well. And of course, it ended the session below 5,000 mark for the first time since April of 2024. That's in 1 year. Meanwhile, Nasdaq also settled by over 2% lower in trade. This morning, you've actually seen a sea of red across Asian markets as well. Hang Seng down by about 1.5%, Nikkei down by 2.6%. All of these bounces of yesterday are again getting, checked in today's trading session yesterday as well. And when we look at the GIFT Nifty trends, that's also indicating a negative start today, a gap down at 22,416.4% lower in trade. So we'll focus on all these moving parts. Let's welcome our guest on board. We have Mr. Gaurang Shah, Senior Vice President, Geojit Financial Advisors, now joining in on the program with us. A warm welcome to you, Mr. Shah, and thank you so much for taking the time out for this discussion. We'd like to begin by understanding from you about this tariff first, because that's the biggest point of concern at this point in time for investors worldwide. Today is when 180 countries will see higher tariffs go into play. What exactly do you foresee for India? We have so far tried to approach with a negotiatory fashion on the new tariffs that have been announced. Nothing so far concrete has been, decided as of now between the two countries. But tonight is when the new tariffs go. What do we expect, sir?
Thank you so much, Sakshi, for having me on this platform. Morning to you and to all the viewers of BTTV. One small request, Sakshi, I'd send a mail regarding the change in the name of my company, our company, from Geojit Financial Services to Geojit Investments Limited. Would request you to kindly inform your team and do the needful and effect those changes from next week onwards. As far as tariffs are concerned, I think he's spoken about at some gathering in US. He means President Trump has spoken about more tariffs coming on pharma as well, and he wants pharma to be made in America as well.
Yeah.
Honestly, Sakshi, if common sense has to prevail upon an ordinary person or so-called intellectual person like President Trump, how does he expect overnight facilities to come up in America? I severely don't understand that. And just because he is there as a president for the next 4 years, the term that is, don't know what is going to happen next time, whether the Democrats are going to come or the Republicans are going to come. Who is going to shift lock, stock, and barrel? Which businessman or industrialist is going to shift lock, stock, and barrel manufacturing or supply facilities or service facilities for 4 years from the country where they are already operating into United States, where again cost of land is high, cost of labor is high, laws are extremely stringent, and the manufactured cost is relatively higher compared to the rest of the world. So, where this thought process comes, I'm totally flustered to understand that. Anyways, having said that, I think markets will have to deal this. This is not the end, Sakshi. We will see choppiness not only in our markets but the markets across the world. But for India, I have a little bit of positive, not little bit, a bit more positive approach in terms of the performance, both in terms of economy and capital market. Why? Look, India has been a consumption driven market domestically, point number one. Point number two, GDP growth rate anywhere between 6 to 6.5, I think is good enough. Interest rates coming down, again, we'll see today what's going to happen. Large part of this action feels that it's going to be a 0.25 basis point cut, and the commentary is going to be very accommodative or dovish or whatever be it. We have huge, huge, relatively better tax collection now than what it was 10, 15 years back. GST is clocking record numbers every month, uh, and both direct indirect collections is good. We are seeing inflation coming down. We've seen crude oil prices come down, rupees stable against the dollar or it has gained strength. So these backdrop of events which I've just mentioned, six, seven of them, or maybe more, I can't recollect more, but it gives me an indication that, like COVID, I think this will also be similar. India will be one of the first economy or capital markets that will emerge as a winner. And I seriously hope that there is some common sense that prevails upon the president of United States of America. I don't know whether I'm right or wrong in saying that, but I have my own limited understanding in terms of manufacturing activity getting shifted to US.
Yeah, you made a very important point in your early part of the answer where you said that you're positive on India vis-a-vis the other countries. Now, looking at what's happening with China, the retaliatory measures, one-upmanship that's happening, 104% kind of tariffs now being announced because China retaliated. What does it mean for India? Is it going to be again seen as, an alternative and therefore more so?
Sakshi, one more thing that comes to my mind is how can an individual think that he is the God's answer to this face of earth? Honestly, I mean, you can't have a dictatorship-like approach, especially with country like China. I mean, what are you trying to do? Honestly, again, here again, I'll draw a positive over here. So, if two large economies in the world are
Yeah.
going to go on head-on collision, I think it will benefit India again because post COVID, that China plus one, Europe plus one,
Yeah.
it materialized, but it did not materialize as much as ground level, especially China plus one. But with this situation, 104, then God knows what America is going to do and what China is going to do and what retaliatory, counter retaliatory tariff is going to put in. So my sense is that somewhere even here also, there is a possibility of advantage India. My only issue is two things as far as India is concerned. One is competitiveness, Sakshi, both in terms of quality, quantity, and productivity. Okay. And the second one is uh, make policies more conducive for Indian corporates to compete at those kind of levels. And for that, the government has to step in. Okay. So that's my only hurdle. Otherwise, I don't think we can lag behind. I think this is a big opportunity and we should encash upon it.
We shouldn't cash upon it. Pre-open trades, you can see wild swings there, but at this point in time, 22,300 and thereabouts, about 240 odd points of a loss. Percent down is what is being indicated for the opening today. We'll see how it really goes forward. But I think this again brings us to the question of, how does an average retail investor deal with all of these, wild swings of the world? of course, as a reaction to whims and fancies of leadership of the large economies, playing tit for tat at this point in time. Something like you just said, that, what happens to an average retail investor who'd been focusing on that, yes, I'm playing for the long term, but every day is seeing, wild swings in the markets. What does one do?
You can't stop somebody from saying or doing whatever he or she wants to do. Am I right, Sakshi?
Yeah, yeah.
So, and the one thing is always a fact, and I've also mentioned many times in interaction with you on your channel that look, equity market investment is all about high risk, high return,
Yes.
locally and more so globally. And now we are seeing that global turmoil in terms of nuclear economic war, I would rather put it that way, which is initiated by America. And each and every country which is a part of this world will have to pay a price for it, depending upon how good, bad the situation is. That's the kind of impact that. So my sense is that don't first of all read too much into the market every day. Point number one. Point number two, don't listen also too much of the noise pollution around. And especially so, please do not accept as gospel truth what is available on unsolicited international universities of WhatsApp and YouTube and X and Y and Twitter of the world, because
Correct.
that will again create a lot of confusion in your mind. Be a little bit selective in terms of what you want to listen, what you want to read, and then possibly take a call. But be prepared. This situation is going to stay for longer now for a decisive resolution and bottoming out of the market is concerned. Till such time, okay, earlier I used to say put 25, 30, 40% if you want to invest, say 100 rupees, put 30, 40 rupees. Now I think you should scale it down to maybe about 15, 20 rupees. But the place where you need to invest that money is from a long term point of view. First is going to be large cap, sector specific, and then
Okay.
flipping onto mid caps, again sector specific. Small cap, micro cap, no cap is absolutely avoided.
Okay, small cap, micro cap is definitely avoidable at this point in time. Better to go for large caps at this point in time, select sectors there. So we'll ask you, is there anything called as tariff-proof sectors? We have not seen that happen. We thought Pharma is going to be that, but you pointed out just the next day, the statements came in that brought down the Pharma stocks sharply lower. So is there anything called as tariff-proof stocks or sectors that one can look at?
No, there is nothing foolproof, honestly, Sakshi. Markets will take everything with itself when it goes down. Maybe some sectors may not go down as well, as
Yeah.
much as other sectors, but everything is going to correct. So, where is the place to look out? So, I did a little bit of homework on that, if you will. And I realized, look, there are a couple of sectors. One is, of course, power generation. Second one is defense. Third is capital goods engineering. Fourth is FMCG. Fifth will be hospitality. Uh, these are some of the five plus sectors that as of now I have did a little bit of homework. There would be a little bit one or two more sectors, but I need to do a little bit of more homework and study on that. But I think these five sectors would be relatively insulated, not totally insulated, but relatively insulated.
Okay, fair point. I also wanted to get a sense on, multi-asset approach. What's the sense that you're getting on gold and silver at this point in time? Again, there's a lot of volatility even there. I mean, when in uncertainty, gold prices should be rising. They're also testing or, coming under pressure of these tariffs. So what's really happening, and what does one really do if one wants to even shift out a part of it from equities at this point in time when the prices of gold and silver are already at an all-time high, and they're also coming under the fresh pressures of what happens if the economies turn into recession. So then nobody will even go for a gold or silver, which used to be seen as a hedge against, say, an inflation or uncertainty. How does one really go about multi-asset approach then? Gold, silver, currencies, bonds, all of them have actually been coming under pressure now, sir.
So minus Bitcoin and crypto, I think all assets I would vote for, honestly speaking.
Okay,
And the
okay.
reason why I don't talk about much about Bitcoin or crypto is because I myself have a very limited understanding of it, and I don't think it's a asset class altogether because I don't see it, I don't feel it. That's the problem. Whereas gold, silver, and platinum, of course, but platinum is not traded as much as gold and silver is traded, Sakshi. And then you know very well I've been positive on gold for a pretty long time. Though you had not asked my advice, but I had given you an advice on gold. Uh, Look, gold has got two benefits. One is, of course, this kind of slowdown in global economy and trade war. And the second one, more reason for gold and silver to move up is because of geopolitical situation. We already have Ukraine, Russia, which is not yet settled. Then we had Israel, Hamas. Now we have Iran and US. And they're talking about the N word, which is, of course, very scary. But nevertheless, I think here also, first of all, don't expect gold and silver to give you the kind of run rate return equity gives you. That's totally misunderstood. Gold, silver, these are the asset classes which will give you return over the 2 year, 3 year, 5 year period. And when they move, they'll make up for the time lost. So, I would say that at least put 15-20% or, depending upon your age and your risk appetite, you can, raise the percentage of investment in gold and silver, but at least have 15 to 20%. And here again, you have a lot of ways to do it. You have gold ETFs listed on the stock
Yeah.
exchanges, I think 12 of
Yeah.
them, if I'm not mistaken, 12
Hmm.
plus that. And then you have, of course, mutual funds, So do a systematic approach, Don't rush into putting all your money at one time in this kind of an uncertain time. Step by step, systematic discipline, part by part would be the best way to get invested in the market.
Okay, we'll just quickly look at how the pre-open trade has settled. 22,460, much better off than what the opening was of the pre-open. So 75 points of a cut. Although autos, realty, consumer durables, FMCG, largely the rate sensitives could be in focus today, and they are showing us some kind of an uptick in the pre-open. Rest of the space is still under pressure. We could again see stocks like, say, auto names, Aisher, M&M in focus, Titan back in focus again, Sriram Finance from the NBFC space in focus. But we'll see how the final opening happens at this point in time. You are seeing some moves on this front. Let's also look at the heavyweight counters, Reliance Industries, banks, for instance, ICICI, HDFC. And let's also pull up some of the IT names. RIL is down by about 1% in the pre-open trade. When we look at the banks, Axis is slightly higher in trade. Kotak also slightly higher in trade. You also see ICICI Bank and HDFC in the positive zone. But IT stocks still under pressure. Infi, Tech Mahindra, HCL Tech, Wipro all under pressure in the pre-open trade. So we'll continue to focus on that once markets come back into trade. But we'll also discuss one more aspect with Gaurav, sir, and that's the earnings aspect that we are all going to be looking forward to starting tomorrow when TCS will report its numbers and the earnings season will kickstart. Let's first focus on the IT sector, sir. I want to understand from you, because of this tariff talk, do you think there is further going to be some kind of a question mark on what the companies really talk about as the outlook? Will there be further uncertainty, or will there be further clouds on what they can expect going forward from here? And therefore, how does one approach the IT sector during earnings?
Actually, historically, fourth quarter for IT sector has always been soft. So this is no surprise. Second point is that we are just at the initial or nasal stage of what Trump is doing, right?
Yeah.
He's just put all this thing in place. Now, how much slowdown is going to come into America, we don't know. We'll only know about it as we go into the future. What kind of budgetary cuts are going to be for IT spend, or discretionary spend cuts are going to be for IT spend? That we'll know into the future. But whether it is going to have an impact, I think right now commenting on it is going to be a little bit too early, honestly, because I don't have data points, I don't have numbers to speak about to conclude whether how much hit is going to be. But there is going to be a slight pain, at least in the short to medium term, on the IT sector. But from a long-term point of view, having said that, we at Geojit Investments Limited remain positive, and I think the impact is going to be very minimal of whatever is happening in the United States of America as far as IT sector is concerned. Yes, they derive a large part of their bottom line and top line from US, but I don't think as of now, whatever is known to me and whatever my capability of understanding is, I don't think it is going to be as severe as people think it is going to be.
Okay. And the overall earnings season, sir, what's the sense that you have this time around? Where do you think we will still see outperformance vis-a-vis others, and where could there be still a lot of, caution that one needs to approach with?
So at least for this quarter, fourth quarter, last financial year, I think pharma should do well. Pharma related stories, whether it is pharma or hospitality, I beg your pardon, hospitals, healthcare or diagnostics, they should do well. Hospitality, that is hotels, should do well. Autos should deliver good numbers. Banking and finance will again, public, private, strong NBFCs should deliver good numbers. Offtake of cement has been robust, so cement should do well. And of course, cap goods engineering and defense. I think these are some of the places where you are going to see some positivity. Pain will be in metals, pain will be in oil and gas, and of course, like I mentioned, IT, at least for this quarter.
Okay. Since you talked about oil and gas, I wanted to talk about crude oil, testing $60, falling to four-year low at this point in time. We've always seen as benefiting from lower crude oil prices as a nation. What should one's approach be at this point in time? What the government's approach is to hike excise duty even at this point in time, even though it's not getting passed on to the consumers, but the companies will surely be still impacted. How should one be really looking at this space, sir?
So again, this has also been a painful sector in terms of performance, largely sideways to an underperformer. Possibly you might see some kind of respite in terms of lower crude oil prices. Sustainability is going to be a big thing that to watch out for, because if you have crude oil prices lower for 1 or 2 weeks, does not really materially impact oil marketing companies, oil exploration companies. It has to stay there for a long period to have a meaningful impact, depending upon which way the earnings are going to get delivered. But we remain positive on oil, three oil marketing companies, HP, BPIOC, and oil exploration companies, that is ONGC and GAIL.
Okay, we'll keep an eye out on that too. Apart from this, also wanted to get a sense from you on the consumption basket, particularly FMCG, then consumer durables. What should one's approach be here? Summer season starting, tax cuts, finally getting implemented. What is your favorite space among the consumption themes, sir, here?
So, I mean, I am positive on both consumer discretionary and non-discretionary, because both of them are going to see traction as we go. But the only thing is that whatever has happened in form of slab changes in the income tax announcement by the Honorable Finance Minister will start having its impact at ground level from third quarter this financial year, October, November, December, and that too in a phased out manner.
Okay.
So you need to be, and again, crude oil prices lower is also beneficial for the FMCG sector.
Right. We'll focus on the market opening now. 22,398. We're 145 points lower, 0.6% of a cut on the Nifty. The Nifty Bank, 0.2% of a cut on that one as well, 50,406. There are three sectors that are higher in trade at open. You can see FMCG, auto, now only two. Rest of them are still lower. IT is the top loser, down about 2.4%, 2.5% odd. Another downtick that can be seen on pharma again, 2.5% of a cut. Metals also weak by about 1%. Realty, oil and gas, these are the top five sectors where there are being seen cuts right at the open as well. Broader markets also lower in trade by about 0.3, 0.4%, both mid and small caps. You can also look at the banks. Private banks are absolutely flat with a negative bias. Financial services down by 0.2%. Top movers on the Nifty today are Power Grid, Hindustan Unilever, Bajaj Auto, M&M and Nestle. So you see some auto names, FMCG names also coming in tow in hopes probably of the rate cut that could come in to support the sentiments. But on the lower end, Dr. Reddy's is down, Cipla is down in trade, Wipro, Infosys, HCL Tech, these are the laggards, over 2% of cut across the board. There are about 7-8 stocks that are still holding up, but IT sector clearly down in the red as the top losing one. The advanced decline ratio is skewed towards the declines at this point. 960 declines to 606 advances at this point. PSU stocks also down by about 0.3%. Just a far and few between stocks. Power Grid, GAIL, IOC up but most of the stocks within the railway pack, for instance, oil and gas stories, defense, that also seems to be under pressure at this point in time. F&O movers, you have Berger Paints, Power Grid, IRB Infra and KI Industries as those sectors that are moving up. But on the lower end, again, it's all the pharma space, Oro Pharma, Zydus, Emphasis. Those are the spaces that are still weak. Let's get back to our conversation with Ms. Shah. Gaurang sir, you did say that pharma, especially on the hospital space, you are still positive. But what happens to these frontline pharma OEM names like Dr. Reddy, Cipla, Sun Pharma? Finally, there was some uptake over the last couple of years on the pharma space, but again with the change in world order due to what happens on the tariff front, what's the sense that you get on these frontline pharma names, sir?
Again, since the announcement is there about a major tariff coming in on pharma, how much again we'll have to wait and watch, honestly, Sakshi, because like 180 plus nations, I don't know what kind of names are there in the list, and I don't have any information about how much tariff is going to come through. There is absolutely no clarity on that. But this news will have its impact on pharma today. I guess pharma should be down today. But this is again short, news-based reaction. If you ask me, I think there is a huge opportunity for pharma. And the fact of the matter is, to come up with the capability and capacity the way India has over the years, over the decades, it's not going to be easy. It's going to be very, very difficult. And what about the end cost of a particular product or service which is going to be shifted to US and made over there? So I think this is all wait and watch. Honestly, I'm not too uh, 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 overly concerned, if you will, in terms of a long-term durable impact on pharma. I think news is there today. You might see another correction in pharma as and when we have clarity on which country and how much tariff is going to be implemented. Again, you will see a knee-jerk reaction, and then they should settle down. So I would say that if you are not a short-term, medium-term trader, and if you're a long-term investor, then look at opportunities in this kind of a downturn. Sun Pharma, Dr. Reddy's, Cipla, Divi's Laboratories, Aurobindo Pharma, Zydus Life, Zydus Wellness. Hospitals, we have Apollo, Narayan, Rudalaya, Fortis Healthcare. Diagnostics, we have Dr. Lal Path Labs. These are, again, I'm talking on fundamentals. I don't know what will happen in the next 2, 3 months. And of course, on the day when the announcement comes of tariff on pharma.
Okay, so Gaurang sir, also there are being seen some of the sectors that will also see this impact if tariffs go on just 10 minutes from now, US time, and you can actually see India's agri space, machinery, chemicals, jewelry space. What about these spaces? Do you think they are more vulnerable than the others at this point?
So US does not have a very strong agri infrastructure. At least, that's what my understanding is. I could be wrong over there. And India, we have a huge, huge dependency on agri. We have a 140 crore population to feed. Large part of that 140 crore, 70%, if I'm not mistaken, is dependent on agri activity. Very soon you will have monsoon forecast. And look, you have to be rich in terms of goods and services, but you also have to be rich in terms of agri activity. And the good part of our land is that we have a fertile land and we have rain gods who've been kind enough on us. Barring 1 or 2 years, there might be some deficit. But if you look at this, then I think it is equally important because food is going to be scarcity as we go into the future. And that's a fact, Sakshi. Given the kind of, climate change, global warming, etc., that is happening. So if we are able to secure our needs and with technology parted to our farmers, brothers and sisters, and if they are able to produce well, multiple crop from a particular piece of land that they have, then I think it's going to be a comfortable ride going into the future.
Okay, fair point. I also wanted to get a sense. You did point out in your initial comments that you expect the RBI to go for a 25 basis points cut today. That's the big event that we are looking forward to today. But is there a case for a deeper cut at all to cushion the economy from these tariff blows? Is that needed? What else do you expect from the governor to really shed light on as to what the central bank is focused on when it comes to the impact on say growth because of tariffs? There is on the one hand expectation or some kind of an anticipation that US might slip into recession if this has to escalate, and sooner rather than later. If that happens, then how will the RBI continue to cushion the Indian economy from the ripple impact?
So I think it's going to be a slow steady approach. Look, Sakshi, with rate cuts, you can't be doing a flip flop, right?
Yeah.
And you have to do it in a measured way, depending upon totally data driven it is. It is not assuming anything, mind you well. So first of all, I think if your inflation is going to be down, and which it is right now, then I think that's one of the greatest moderation that the embassy have on their mind. And inflation is reasonably down. Let's hope it stays that way and comes to four, sub four. Only then and then, and if it is stays over there, inflation stays over the comfort zone of the Monetary Policy Committee and RBI governor, then and only then you will see any kind of more aggressive rate cuts coming through. Unless and until that happens, I think it's going to be at 25 bips. Let's see how things pan out, because again, world is stepping into a total different scenario with whatever America is doing. To gauge the impact of that is going to take time. You can't preempt anything as far as Trump is concerned. God knows what he's going to dream tonight and what he's going to implement in terms of executive order tomorrow morning or make a policy tomorrow morning. We have no clue about it. He's that extremely unpredictable guy on the
Yeah.
face of earth. So it's going to be a measured approach. I don't think there'll be any aggressive rate cuts from the RBI just to cushion the economy. I think it has to be data driven.
Fair point. Okay, all right. Mr. Shah, then we'll leave you at that. Thank you so much for
Thank
being
you.
with us on the show and highlighting all these key important points that we need to keep an eye out on, yet keep our focus on the long-term portfolios and let things pass. As we've already seen in the past many times over, the challenges that have come forth and we have seen things pass by. This too hopefully will pass and we will get into brighter zones going forward. Thank you so much. Always appreciate your time, sir.
Thank you, Sakshi. All the best to you. Thank you so much.
Thank you. All right, so that was Mr. Gaurang Shah, Senior Vice President, Jurjit Investments, sharing the light on as far as markets and the outlook on various sectors is concerned. And now we have another special guest joining in for all our viewers. We have Mr. Rudramurthy joining in, Research Head at Vachna Investments. A lot of our followers have been waiting for you, sir. Wherever you come, the lineup, they ask for you. So thank you so much for again finding time for us on the show to help us with what's really happening around the world. There's a lot of moving parts, and we have to really brace for a lot of volatility these days. Every time we don't know how statements come flying by and what will happen at one statement, at one word, how the global markets will react and how India will react thereof as well. We met you the last time around when we were discussing that probably we have seen a near-term bottom being made, things may look up, but bang comes the tariffs and they again change the world order. What's the sense with which you're approaching the markets this day?
Sakshi, thanks so much for having me in the show, and it is my privilege always to be in your show and to
Thank you.
also give my small experience and knowledge on market which I have to all our viewers who wait for my show. Now, first of all, let me be very clear. Hope you remember from October to March, I was just keeping myself away from screen and I was doing a lot of visits to different places, lot of temples. That's where I get my energy from, and I was just keeping myself away from screen so that I don't do mistakes or I don't want to take positions which are highly leveraged. And as a trader, staying away from screen is very important in sometimes when markets are not lucrative. I will not be now surprised that I want to continue my run to different temples or to different places right now the way Trump is doing. Trump does not even understand and knows what he wants to take as a decision today or tomorrow. He is such a guy. And similarly, even the responses from China, and similarly, you see people like Putin of Russia. The only thing you can do when you see all this is to stay away from screen. wait for these people to just do whatever they want to do. Save your capital, which is very, very important during these times. And then, yes, the opportunity will come in market. Market cannot be like this forever. But these are times you should not try to make money, but you have to save your capital and lose less. Avoid screen time, lessen your leverage, stay in stocks and sectors where the impact of these tariffs are very low or minimal. And this is where you have to now move into large cap, no mid cap, small caps in general, and you have to increase your time horizon. So you cannot just look at these markets for next 3 months, 6 months. You have to see at least next 3 quarters, 4 quarters down the line. Also, very important is I want to see closely what RBI will do today. And I won't be surprised if we see a 50 basis point kind of a rate cut today, even though market is already pricing in a 25 basis point rate cut. And I'm very, very positive on private banks. In fact, if today that 50 basis point rate cut comes, private banks will do very, very well. And in fact, now slowly even PSU bank like SBI and Bank of Baroda is becoming very attractive. And not now, way before also I was just telling, yes, you have valuation comfort in private bank, and that is the place where one has to be there. Look at the chart patterns of HDFC Bank, or even for that matter Kotak Bank. These are all stocks which have hugely outperformed from October 2024 to today. These stocks have done fabulous when Nifty has come down from 26,200 to current levels of around 22,500, 22,300 zone. Whereas you have seen these private banks having done very, very good. Also look at stocks like, for example, Indigo. Fabulous stock. In fact, I remember my words. I was telling you don't buy at 4,500 when it was at 4,500. I said you can even buy it at 4,700 or even buy it at 5,000. And now the stock price is over and above those levels where it is. And this is a stock yesterday made a 52-week high when all the markets were nowhere closer to that 52-week high. And for me, even now I'm making my statement. Now the price on the screen I can see is 5176 on interglobe aviation. Buy it not at 5176, buy it at 5300, buy it at 5500, buy it at 4500 if you get it. Don't see the price. And if you don't have more money to buy 5 shares, buy 10 shares and forget that stock in your portfolio. In fact, I remember I said 2025, the stock in any portfolio and the stock of the year 2025 will be Indigo for me. So you have to be in right sector and right stocks. As a trader, avoid screen time. Save your bullet to shoot when the right time comes. Don't waste it right now in the thin air. And you have to be cautious, have patience, and understand what happened in 2008. I can never forget, with 23 years of experience in market, 2008 had a fall of 55-60% at index level. We have not even seen a 20% fall or a correction in index right now. So what I'm trying to tell you is, I'm not saying we will see a 60% correction in index right now, but at least you have to remain cautious. You have to be planned and prepared for those kinds of event right now. Have a portfolio which is more large cap focused. Have a portfolio which has valuation comfort. Be stock specific and sector specific. Many names I have already told. Be in private banks, public banks, especially be in SBI, Bank of Baroda. Buy stocks like Indigo right now, which I just spoke upon. Look at even Bharti Airtel and Reliance in large cap offers fantastic valuation comfort. So you have to be very sector specific and stock specific. Reduce leverage, avoid screen time, save capital.
Absolutely. Ruta, you did point out that you're looking at what the RBI will do today. I also wanted to ask you, are you expecting anything to be announced vis-a-vis the impact of tariffs on the economy, and therefore the, the actions of the RBI coinciding with that? There is a general consensus of a 25 basis points of a cut. Will that be enough to cushion the impact of tariffs-led, impact on global economies, or do you think some more measures will need to be taken?
See, Sakshi, I am very clear. RBI off late has been very, very conducive to market. Look at the open market operation and the buying what they have done. Look at even the rate cuts what they did in the previous MPC meeting, and today also. I won't be surprised if they do a 50 basis point rate cut. But one thing we have to understand very clear, if turmoil is happening across the globe. India cannot be left isolated. Only thing is we will relatively be better compared to the globe, but we can't be completely isolated. So this is where you have to have the right asset mix in your portfolio. This is where you have to understand Sing is king is an old dialogue. Rudra
Yeah.
says cash is king. You have to have some amount of cash in your portfolio to buy when you get those type of opportunity. Look at what happened on Monday. Most large cap stocks were down 7, 8%, 10% in the gap down. But do you
Yes.
have the money and courage and the stomach to buy those huge fall which happened on Monday? So for that we need some amount of cushion or bullets. So this is where I'm saying cash is king. Have 20, 30% of your portfolio in cash so that you can buy when the right opportunity comes. But I'm very, very clear what all RBI can do, it is doing. What all Modi can do, he is doing. And what all our external affair minister and what we can respond to Donald Trump's madness, that is all done. But only thing I can tell you is these are times where you have to plan and be cautious, be in right sectors and stocks, have some cash in your portfolio, and don't blame on Trump or don't blame on what happened from China as a retaliation or what did India do and all. It is you who have to take care of your portfolio right now and be in right sectors and stocks which I have mentioned.
Okay. But Rudra, will it be fair to say that investors now are looking forward to any tariff-proof stocks or sectors to include in the portfolios? Is there anything like that that exists in the portfolios today? I mean, which is the sector or the stocks that could actually be least impacted or not impacted at all because of external shocks?
See, very, very clear answer, Sakshi. When overall market falls, what happens is the sentiment or panic for short term will paint all the walls with the same brush. So, only thing is relatively you will do better compared to few other stocks which are more prone to tariff and stocks which are less prone to tariff. I'll be very clear. Number one, what to avoid or what is more prone to America? Definitely IT. Not today I'm talking for a long time in your show only, and I come once in 2 weeks, and even then I make a sense of what happens next 2 weeks down the line, and I'm more keen to ensure that yes, the deep research what I do will help our audience. I don't want to be two-sided on market. I always say I don't mind being wrong, but I definitely mind giving two-sided opinion on market.
Yes.
Now, very clear, I'm saying avoid IT, avoid IT, avoid IT. And let me tell you why. 65% of revenue in general of IT companies are dependent on US market. Even though I have valuation comfort, I will definitely avoid IT as a sector in this current market scenario. Number two, avoid even metals now because even metals have lot of exposure in terms of US going into recession is not good for metals because demand will reduce for metals and that is not good for the sector in general. No doubt I still like stocks like Jindal Steel or JSW Steel, but then for me metals as a sector will not do good. Even in IT, I still like stock like Coforge. I still like KPIT. But KPIT, Coforge are stocks which can do way much better than other stocks in the same sector. They will outperform. But in general, I am saying avoid IT, avoid metals, and what to buy in terms of sectors which are not much prone to these tariff is definitely yes, private bank. Private banks, when it comes to private banks, specifically HDFC Bank and Kotak Bank. Now, even for me, SBI and Bank of Baroda looks very attractive. So go for private bank. I'll give you another sector. Look at insurance as a theme. HDFC Life for me is a fabulous stock, and that has nothing to do with Trump tariff. So, in fact, if something goes wrong because of all this Trump tariff, insurance is a sector which will do good. So, for me, yes, you have to focus on private banks. You have to focus on select public sector banks like SBI and Bank of Baroda. Look at insurance as a sector where you have stocks like, for example, HDFC Life or SBI Life, which is very good. From NBFC, Bajaj Finance. I hope you remember, Sakshi, I said the next Bajaj Finance is Bajaj Finance. The next
Yes.
Indigo is Indigo. People ask me, Rudra, tell me which is the next Indigo. I will say it is Indigo. Which is the
Yes.
next Bajaj Finance? It is the Bajaj Finance. So you will make, in these times, don't go to mid and small cap. That is not the hiding place. In general, I am still buying some mid and small cap stocks to my portfolio because I know I will not exit them. And my time frame for that mid and small cap stocks which I am buying it for next 3 year, next 5 year. I am buying stock like Force Motor. For me, for next 3 year, 5 year, I know I will buy Force Motor and I can still make good money there. I am buying Genesis. That looks very, very interesting to me at current market price. But then people who have 3 months view, 6 months view cannot buy these stocks. And what is very important is, in general, at current market juncture where we are, look at stocks and sectors like, for example, I said private bank, select public bank, NBFCs, insurance. In fact, for me, consumer discretionary or FMCG can also do very, very good. The budget tax cuts and 12 lakh of exemption is not a small amount. And look at stocks like, for example, Hindustan Unilever. Look at United Spirits. So for me, McDowell United Spirit throws lot of valuation comfort. For
Okay.
me, Hindustan Unilever throws lot of valuation comfort. Look at Marico. So these are sectors and stocks where you should be in. And I've also told the list where you have to avoid sectors like IT, metals, and high beta. Avoid mid and small caps in general. And wait, let market go to that phase where we have made a bottom, and let market give those signals, then we will come back to mid and small cap. I'm not saying in general never buy mid and small cap. What I'm only trying to tell you is, in this current market scenario, you have to avoid in general mid and small cap unless your time frame is very large, because money will first always flow into large cap, and relatively large cap has better valuation comfort, higher liquidity, and more better choice at current market price. So that's the reason why I'm saying be in large cap, not in mid and small cap in general.
Okay, fair point. So that list of stocks, I hope all our viewers have noted them down, both on the buy as well as the avoid list, so that you know what exactly you need to do with the cash in your portfolio and where should you keep an eye out on and what should you keep on your watch list. We'll also try and understand from you on the gems and jewelry related stocks, gold related stocks as well. Why? Because the gold prices have been already at an all time high. Now there has been again some softness of late, and that's because of the tariff tantrums as well, playing havoc across asset classes, not just equities. But we've also been getting a lot of updates from our domestic players. Say Titan came out with its numbers yesterday, and we did see now Senco Gold come out with the numbers today. That stock has also gained 5% today after the company is guided for robust Q1 of FY26. Positive updates coming in on a year-on-year growth aspect as well. What does one do here with the gold-related stocks, Rudra?
Sakshi, I am very bullish on this sector also at current market price. We have seen good correction in most of these stocks, and for me, Titan, having seen a fall of over 25-30% from its recent top, offers a mouth-watering buy at current market price. And also others jewelry stocks. Look at even Tangamail jewelry. For me, it's a very, very good stock to buy at current market price. I know gold has given 40% return in last 2 years. But even if you see some correction in gold prices, it may not be more than 5-10%. And always remember, whenever you are having high expectation of recession to come in US, in fact, Morgan Stanley came out with a report which says now the probability is 60%. And whenever you have war fears around, you will have more money flowing into safe assets like gold. So
Okay.
for me, yes, you might see some time-wise correction in gold, and price-wise correction might be very small in gold, keeping in mind all the things happening around. So yes, 5-10% kind of a correction in gold can happen from current level, but don't expect a 40-50% kind of a correction. And I read a report which said gold will come down as low as 40% from current market price. For me, even to dream that is very difficult. Forget that in reality. And keeping in mind the things happening around. So for me, if gold has to come down so heavily, then you should have a booming economy and you should have stock market rising and soaring high, and then people selling their gold and buying into stock. So that is not happening anytime soon. So what I want to just tell you is, yes, this sector will do good. be very stock specific. I like Titan, I like Tangamile jewelry in this space, and very, very important, even gold financing companies will do very good. Manappuram, I remember at 200 I was talking about Manappuram in your show, 160 I spoke about
Yes.
Manappuram. Now the stock might be at 225. You're only saying, okay, Rudra, from 160 it is 225, but do see what has happened to market when market has tanked and nose dived with most stocks falling 40-50%. Manappuram has gone up from 160 to 225 in this bad market. Now you will ask me which is the next Manappuram. It is the Manappuram. So Manappuram even at levels of 225, 230 offers a great buy for me. Buy into Manappuram even at current market price. I won't be surprised to see this stock at 300, 350 over a period of 1 to 2 year. So you have to be very stock specific and sector specific. Yes, I do like this sector, stock specific. Manappuram into gold finance company. Compared to Muthoot, definitely Manappuram for me has much better valuation comfort. And in terms of buying into the sector, yes, Titan and Tangamile jewelry will be good. And mid cap generally, yes, you have to be very careful when you buy them. And also allocation of those stocks into your portfolio and their weightage in your portfolio also makes most important decision in your portfolio.
Okay, so that's as far as the gold related stocks are concerned. We'll also talk about one more sector, pharma. Rudra, I'll expect you to just form your views there on all the three segments of the pharma, the OEM players, the hospital chains, the diagnostic ones. But before that, I want to actually make all our viewers listen to what US President Donald Trump has said on pharma. Remember, we've all been looking forward to how pharma used to be seen as a safer haven than the others because that was not taxed first. Thereafter, statements started coming in that pharma will be taxed. And now Donald Trump has indicated that pharma tariffs may be coming in very soon. Let's listen in to what he had to say.
We have to do, we're going to tariff our pharmaceuticals, and once we do that, they're going to come rushing back into our country because we're the big market. The advantage we have over everybody is that we're the big market. So we're going to be announcing very shortly a major tariff on pharmaceuticals.
Pharma index itself is down by about 1.5% odd, and Donald Trump has said that he will be announcing tariffs on pharma very soon. Remember that he's also indicated that US as a country does not have huge manufacturing facilities when it comes to pharma, and therefore he really wants to put tariffs on any imported pharma so that he wants more and more companies to go to the US and set up facilities there as well. Let's go back to Rudra to help us understand what does it mean for the pharma companies in India. So far, there was a zero tariff on pharma exports. How do you expect things to pan out for this space, and what is the right approach to this one, Rudra?
Yeah, Sakshi, I don't understand pharma as a sector much better, or I don't have deeper knowledge into the sector. But still, I can tell you there are two stocks in pharma which I do like based on their chart formation and their relative strength. So look at stock like Divi's Lab. Yes, Divi's Lab, when all the stocks in the rest of the same pack is falling, relatively there is a lot of strength for me in Divi's Lab. No doubt markets are weak and this stock is making a time-wise consolidation but not falling. So yes, at levels closer to that 4,900, 5,000 levels, when you get Divi's Lab, it's a buy. So buy even at current market price and on dips to those levels of 4,900 where it has strong support. So for me, Divi's Lab is a good buy. And Laurus Lab is another stock which I really like in pharma. So Laurus Lab, yes, strong support for this stock is at around 510, 515 zone. And on panic days like Monday, yes, it tested that strong support of around 515, 520 and then gave a good bounce. So might be, yes, two stocks from pharma if I have to bet my money on. I will be taking up Laurus Lab and I will be looking at Divi's Lab. These are two stocks on every dips you can buy. There is definitely relative strength in both these stocks and it's a buy for me, stock specific from this particular sector.
Okay, got that. So that's as far as the pharma space is concerned. Let's get back to the markets and see what's buzzing here to get some more views out of Rudra. Only FMCG and autos, they are showing some signs of positivity. Rest all of the sectors have slipped into the trade. Remember, these are also the rate sensitive sectors in hopes of some rate cuts coming, thereby bringing down the costs for the our end consumer. We have some momentum on broader markets as well. Transformers and rectifiers earnings impact 5% higher in trade. You also have some names like 1.1 Solutions, that's up by about 8 odd percent in the broadest index. Senco Gold we have already marked, that's also up and about. And you do have some such names that are up within the broadest index. Nifty next 50, you have FMCG names like Britannia, Dabur, that's buzzing. Swiggy is slightly higher. United Spirits, as was marked by Rudra, is also up in trade today. Indigo, as was marked by Rudra, is 1% higher in trade. His key favorite stocks that are buzzing. Within the banks, you have Sundaram Finance up by 1%, Credit Access Grameen up, Bajaj Finserv up in trade today. That's the kind of move that we are getting. Let's look at what's happening in the broader index of mid and small caps as well. I think the index is down by about 1%. But you do see some momentum on, say, a Bharti Hexacom, Escorts Kubota, Colgate Palmolive, Bank of Maharashtra, IRB, Infra Vishal, Megamart. Marico is something that Rudra pointed out that he likes. That's also up and about in the mid-cap space. That's how the momentum is playing out. Let's also look at the small caps basket as well to see what's buzzing here in an otherwise slightly softer market. Godfrey Phillips, Ramakrishna Forgings, Atul Limited, Credit Access Grameen we marked, Naveen Fluorine, Tata Chemicals, Chambal Fertilizers, that's also up in trade in the small cap story. So a lot of varied names right there, but no particular trend as such. So it's a very, very stock selective market at this point in time. Let's get a sense on the banks and the financials with you. Rudra, you did talk about how Bajaj Finance continues to remain your top bet in the NBFC space. What happens to private and PSU banks at this point? What are you looking at?
So as I told Sakshi already, two banks, one is HDFC Bank and second is Kotak Bank. So when it comes to private banks, I'm very choosy. So it is in the same order. First is HDFC Bank, second is Kotak, or other way around also. For me, both looks very, very attractive. Then below that, yes, I will be looking at Axis and ICICI Bank. But still for me, HDFC and Kotak will do much better than ICICI and Axis Bank. And when it comes to public sector bank, I will still remain with only two banks there, that is State Bank of India and Bank of Baroda. So these are four stocks which you can definitely have in your portfolio, two private bank and two public sector bank. And from NBFCs, yes, I like Bajaj Finance, and after that even Chola Finance and Shriram Finance looks very good to me. And from insurance, I was talking about two stocks, HDFC Life and SBI Life. Those two stocks are really very good. And I also told about FMCG and even consumer discretionary, where you can pick up stocks like, for example, I told you can look at even stocks like either McDowell or your United Spirit, or even look at Hindustan Unilever. So these are stocks which can definitely do good. And in fact, at current price, I even like stock like Paytm. Yes, Paytm at 2000 plus level when the IPO came, it was definitely not lucrative. And I still remember, Sakshi, many a times whenever you have asked me about this new age company, I've always told two stocks I like in new age company, and if you force me to buy, it will be Zomato and Paytm. And see the performance of both the stocks. They have not fallen even when markets like mid and small caps were just crashing. Paytm was in fact at around 300 rupee, from where it went up to 900 plus, and then it is now at around 800. So might be, yes, in the negative market it might even come down to 750 700 zone, but at current market price I'll be a buyer and I'll keep accumulating it on every dips. So Paytm is a buy, Zomato is a buy. I've named so many sectors and stocks where you can buy, but after all this, I will be very clear, I am still having very cautious approach towards market. I will be still sitting with at least 20% plus cash to deploy during great opportunity times which will come, and have a longer time frame. Mid and small cap in general avoid IT, avoid even metals, and be very sector and stock specific. And let me make this most important statement. Big money is done only by buying right stocks in the bear market. You cannot make big money in bull market. You will make big money only when you buy right stocks in the bear market. The big underlined word is right stock. And if you want to know which are those right stocks, you have got enough in the last half an hour in the Sakshi show with Rudra here.
Absolutely, and I'm glad, Rudra, that you've actually given a lot of clarity on a whole host of sectors and where exactly can one definitely keep that focus on. A line that Rudra always gives for our investors and viewers to keep in mind. Today he says big money is always made in buying the right stocks in a bear market. So keep that in mind when you invest. Rudra, it's always a pleasure to host you on Business Today Television and on Market Today. We hope that you have a great time, and we'll see you very soon on another edition of Business Today Television. Thank you so much for sharing all those insights.
Thank you so much, Sakshi. My privilege always to be in your show. Thank you so much. Have a nice day.
Thank you. You too. All right, viewers, we'll wrap it up at that. The market's still slightly softer. You can see 22,400 on the screens on the Nifty. It's volatile to say the least, 0.5% of a dip that can be seen even now. The 26% tariff that was announced on April 2nd by Donald Trump on India has come into effect. Let's see what happens now going forward from here. Is there any rollback? Is there any discussion on that? Everything hinges on what happens from here on the bilateral talks between the countries and what happens going forward within the other nations dealing with tariffs as well with the US. Up next is RBI's rate decision, 10 a.m. is what we are looking forward to listening from the RBI governor on what the latest decision of the Monetary Policy Committee is. So stay tuned. There's a lot more, an action-packed day ahead on Business Today Television for all of you.
Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. Today we discuss some of the quality investments that are available to you at fairly reasonable prices, especially those